Next, we're going to talk about how to save your receipts. A lot of business owners don't know or don't understand that you have to save your receipts. For instance, if you go to Walmart and you have that Walmart charge on your credit card statement, the Walmart charge isn't anything that the IRS agent is going to allow if you don't have a receipt, because they don't know if you're getting underwear, socks, or groceries there. You could have been buying paper for your business, but without that receipt that shows the paper cost, they're not going to allow it. So receipts, you have to keep them. So what I do is you can get an accordion file, or if you have more receipts, you can get, we go through a lot of paper here at Elite, even though we're paperless. Some clients still love paper. So I get one of the paper boxes at the beginning of the year. I put my files in there and I label them. I go back to that chart of accounts to help me think about my labels. But for me, it's going to be fuel or fuel expenses, auto repairs, cell phone, utility bills, meals, employee appreciation events. We try and do a lot of those here at Elite because our employees are rock stars. So what I do is I create this file once a week. Wendy up front goes through the receipts and she puts them in the appropriate files that they need to go in. I never look at them. I audit everything through reconciling our bank statements. And then at the end of the year, December 31st, we put a lid on that box. I write 2022 on it. I throw it up in my attic and I start a brand new one for 2023. That's how I save all my receipts. Like Kelly said, your calendar is your Bible. If you go into an audit, that is going to be really, really important. And so in that calendar, I'm also documenting who I ate with, why it's necessary, what we talked about. I have the receipt up in my attic. And on the calendar, you'll see, and then I also have my bank statement, which you'll see the exact charge of where we ate and how much it cost. And so a lot of clients ask, how long should you keep your tax returns? Tax returns, I keep them all the time. I don't throw away any tax returns. We're paperless now, so a lot of you have your tax returns on our client portal that will stay there forever. But for your tax returns, those are important in case you ever have a discrepancy with Social Security office to have those. But receipts, you have to keep them for 4 years. After 4 years, you can shred them. But if you haven't had good documentation in the past and the IRS audits you, they're auditing 2019 right now. If they audit you for 2019 and see a lot of holes in it, like Kelly said, they can go back several years. So keep that in mind as well if you haven't been good on your documentation. All right, separation of bank accounts, another thing that our clients aren't great at. And so again, we're crossing those T's and dotting our I's and just doing things by the book starting now. And so commingling of funds is a no. The IRS hates that. We're going to create 2 separate bank accounts, one a business bank account and your personal bank account. Things that aren't going to be in your corporate bank account, your business bank account, are your Nordstrom's rack receipts, your Lululemon, your football game tickets. Those aren't a write-off on the business. Those are personal expenses. And so what you want to do is you want to transfer money, owner's profit or owner's distribution, over to your personal account. You're also taking your W-2 wages, so that's another way to get money in your personal account. And in your personal account is where you're going to buy groceries, your jewelry, your shoes, your uniforms, your clothing. I know my business owners think that it's uniforms, but this is not a uniform. I cannot write off this outfit. It does not have my company logo on it. And the IRS looks at it as I can wear it anywhere. And so that is not a write-off for you. Real estate agents getting your hair and nails done and your eyelash extensions, that is not a write-off. I agree, part of selling is looking great and playing the part, but the IRS doesn't agree with that. So those are personal expenses, not a business write-off. So don't commingle. Another reason why we don't like commingling is if we ever do go into an IRS audit, and I like to knock on wood because I hope that that doesn't happen. It stinks, but we shouldn't fear it. We should take the expenses that we are entitled to. If you ever go into an IRS audit, it is really important that we're not showing them the entire world. We're answering only the questions and only giving proof of what they've asked for. If you've commingled, they're seeing everything. And now we have more questions and more time involved in the audits. And they know a lot more, and we don't want it that way.